he can be about 70, 65, 70% correct. But that 30%, 25% of doubt whether he has timed the market perfectly, whether he's predicted the market perfectly, always remains. So for aggressive clients who want to do a lump sum investments into equity, we suggest them systematic transfer plans. What we do in systematic transfer plans is we just invest into a low risk, low return kind of a fund, probably a liquid fund or an arbitrage fund, which gives me anywhere between 7 to about 9.5%, 9%, 9.25%. And from there, every week or every month, we systematically transfer some fixed amount to equity. So what's that doing is, instead of doing one lump sum investment at a particular level of the market where we'll have to time the market very accurately for in order to generate returns, and we like that the market goes up, what we're doing is we are averaging out the market. We are buying every week. So let's say 1 week the market is low, 1 week the market is high, 1 week the market is even higher, 1 week the market is at the lowest. We are buying at every stage of the market. We are entering the market when it's lowest, we are entering the market when it's lower, we are entering the market when it's gone high. So we are basically averaging out the market and eliminating the risk of timing and predictions from the market. Something that happens in an SIP also, but SIP is a systematic investment plan in which you invest a fixed amount from a bank account. But what if you have a lump sum, right? If you want to invest a lump sum amount, then you want to do it in equity, we recommend systematic transfer plans for you. Both SIPs and STPs are just ways of investing, right? They are not separate plans as such. Every mutual fund you can get into in three ways: either a lump sum, or an SIP, or an STP. Now, just to differentiate between an SIP and STP returns, so let's say if somebody started investing in July 2010 and he started with 1 lakh of investment every month in a fund called ICICI Prudential Value Discovery Fund. So he's invested about 75 lakhs, on which he's got a profit of about 72 lakhs. So his net portfolio have become 1 crore 47 lakhs. If I calculate the returns for this, let me just calculate on a simple interest basis rather than a CAGR basis. 70 to 58,517 is the profit that I've accrued on an investment of 75 lakhs. Which gives me a percentage. Oh, this is something what I've done wrong. Let me do this again. So 72,585,517 divided by 75. Gives me a return of 96.78%. Starting, if I have started from July 2010, 2011, 12, 13, 14, 15, 16. So this is spread across 6 years. So I'll just divide it simply by 6. And my CAGR returns comes out to be 16.13. This is in case of an SIP. So I'll just open a new tab and I'll just write the returns of an SIP, which is 16.13%. Right? That's in an SIP. Now let me see, what if I had this 75 lakhs in July 2010 and I parked it into an equity arbitrage fund, and from there every week I made an STP to value discovery fund. On an investment of 76 lakhs, let me just calculate, my returns have gone up to 94.79. So 94,79,893 divided by the capital that I've invested, 76 lakhs. The return comes out to be a staggering 124.73%. Again, if I divide it by 6 with the number of years, this comes out to be 20.78. 20.78%. So this is the difference between an SIP and an STP. In an SIP, the money keeps lying in your bank, and from your bank it goes to an equity fund, and that too in a monthly mode. In a STP, you keep your money in an arbitrage or in a liquid fund, which is already giving you about 3.5 to 4%, 5% additional over and top of your savings bank account interest. And on top of that, you're doing a weekly investment rather than a monthly investment. The volatility of the market is more in a weekly basis, on a weekly basis, than on a monthly basis. Hence, you see this is the difference in the returns, right? 16.13% per annum to 20.78% per annum. A lot of people will say this is just about 4.5% per annum. That's not a huge difference. But we are calculating this over a period of 6 years, right? See the returns and the profit. In case of a SIP, on the same investment that I've done, I've just accrued a profit of 72 lakhs.